What's going on, y'all? It's Plainly Bitcoin, back with another video, another article, teaching y'all about Bitcoin, the future of money, because money as we know it is DEAD. Today I'm going to go over this article. It's about Bitcoin mining, teach y'all a little bit about Bitcoin mining, let y'all know what I know. It's about Bitcoin mining. You know, Bitcoin mining is a business, and they want to put Bitcoin on their balance sheets. So a Bitcoin miner is someone that creates the Bitcoin, and to create the Bitcoin, you need a lot of energy and a lot of computing power, a lot of computers, and it's very expensive. So when they make the Bitcoin, they sell it to cover the cost, to cover expenses. They're not able to just hold on to the Bitcoin after they make it. When they mine it, they mine a lot, and they sell it and put it onto the market, and other people buy it up. That's basically what Bitcoin mining is. It's people solving, these miners, these people that have these computers. They also solve complicated math problems in order to produce a block. So that's pretty much Bitcoin mining. That's how Bitcoin is created. It's that's why some people say Bitcoin is a lot like digital energy kind of. It's really tied into energy. It's like Bitcoin is made from energy. So in a lot of ways, it's like our the energy that we have is creating. Um, we're creating a currency out of energy. It's pretty cool. All right, so let's get into this video, y'all. World's largest Bitcoin miner announces $250 million raise to buy more Bitcoin. The new raise is a part of Marathon's strategy to go full hodl and make Bitcoin a strategic reserve asset for the company. Marathon Digital Holdings has announced a $250 million offering of convertible senior notes due in 2031 and a private offering towards qualified institutional buyers. So convertible notes are like it's like short-term debt that the company takes out. They sell them they sell these notes to institutional buyers. And then the buyers give them money, and then they buy Bitcoin with it, and then from then and then they pay back, and then the money gets turned into equity for the company, and then they have to pay it back over a certain amount of time. You know, short term, like taking out short term debt, and they pay it back. It's a way to raise money so they could buy stuff to make more money. Marathon, the world's largest Bitcoin mining firm, is also considering selling an additional 37 million in notes to initial purchasers based on market conditions. Marathon aims to use the 250 million to acquire more Bitcoin, according to an August 12th announcement. Mara intends to use the net proceeds from the sale of the notes to acquire additional Bitcoin and for general corporate purposes, which may include working capital, strategic acquisitions, expansions of existing assets, and repayment of debt and other outstanding obligations. The buying patterns of large Bitcoin holders, such as Bitcoin miners, can have a significant impact on the Bitcoin price due to the large amount of capital involved. Investors often use the buying patterns of large institutions to gauge the demand for Bitcoin. Marathon has increased its Bitcoin holdings by 124 million during July, reaching a total of 20,800 Bitcoin worth over 1.1 billion as of August 6th. Marathon plans to go full hodl, which is crypto slang for hold on for dear life. Fred Thiel, CEO and chairman of Marathon Digital, announced in a July 25th X post. Today, Marathon is proud to announce that to strengthen our strategy of holding Bitcoin as our strategic treasury reserve asset, we have over the past month purchased 100 million in BTC and will now go full hodl. Marathon acquired 100 million worth of Bitcoin in July as it aims to make BTC a strategic treasury reserve asset, as reported by Cointelegraph. Marathon's Bitcoin strategy is a positive development considering that the world's largest Bitcoin miner isn't capitulating despite a 50% cut in block rewards due to the 2024 Bitcoin halving, which could still force other miners to sell BTC. So every 4 years, uh, their their block rewards gets cut in half. That's just something that's baked into the Bitcoin protocol, that only a certain amount of Bitcoin gets made a day. So like before there was a Bitcoin halving this year, and before the Bitcoin halving this year, like 900 Bitcoin was made a day. Now it's cut down to 450, I believe, and that's just something that's baked in the protocol, and it helps. It's the supply structure of Bitcoin. And then once basically all of a lot of Bitcoin has already been mined. So like as the time goes on, as the future goes on, less and less Bitcoin is gonna be getting pumped out into the market, because there's only a 21 million cap, and most of it has already been mined. So from here on out, less and less is gonna be made, which is part of its value and part of what makes Bitcoin scarce. Despite the bullish announcement and continuous buying from Marathon, the price remains under the $60,000 psychological mark. Bitcoin fell over 1% during the past 24 hours to trade at 59,900 as of 11:52 a.m. On the weekly chart, Bitcoin staged an over 16% recovery according to CoinMarketCap data. Inflows into the United States-based spot Bitcoin ETFs, exchange traded funds, also stagnated in the last week. The ETFs recorded 89 million worth of cumulative net outflows on August 9th, according to Farside Investors data. See, it's weird that these ETFs have outflows. It's like, I don't know if that's normal, But I think that's a way for them to try to like manipulate the market, because usually like people that are like those big investors that invest in these ETFs, um, they usually hold on to their investments for years. But they're trying to keep the price down, keep people scared. That's what they do. That's what they do, y'all. So I hope you guys learn a little bit more about what Bitcoin mining is, about the Bitcoin halving. This is Bitcoin's structure. This is how Bitcoin's protocol works. This is a little bit more about Bitcoin. Because I know people are trying to figure out how Bitcoin is made. It's pretty much how Bitcoin is made. There's these really sophisticated computers. There's like, in a lot of cases, there's a lot of them, all stacked up into a big facility, and it's probably a lot of air. It gets hot in there, so there's air conditioning and all those, and then it gets made, and Bitcoin gets made and created, and then don't forget, and they also, these people are solving really complicated math problems, and then it's really based on luck. So people are competing, trying to solve these math problems, and if you get lucky and get the math problem right, then you get granted with producing the block, which means you get to verify that transaction. You get the ability to verify the transaction, and then you get rewarded Bitcoin by doing so. So that's how it works, y'all. That's why I wanted to read this article to y'all to let y'all know how Bitcoin is created. That's how Bitcoin is created, y'all. That's gonna do it for this video, y'all. Good looking out. Thanks for listening, and I'll see you on the next one.